Hello, this is Richard Posen for the Posen Report and Ag Financial Strategies. Several weeks ago we did a video on the wheat market and felt like it was time to consider that wheat was base building and getting ready for a large up move. And the market has stalled out more than anticipated, but nothing has really changed from our model perspective. We've moved a few labels for various cycle tops around a little bit, changed them for degrees of importance. And today USDA released a report and it showed a little more wheat production. They kind of messed around with the supply and demand numbers and really didn't change all that much in my opinion. And here's what the model is showing us an output. It's suggesting an L2 top, which is a cycle from top to top, and I'm tracing it out. And it just occurs again and again. And that will build into a still larger trend called L1. And this is the last L1 top back here in March. Came down for an L1 bottom by April. And since then it's just bounced around in a range into an L2 top and now is due for an L2 bottom. So I think the weakness from this report today is actually very close to placement of such a bottom. So, and I'm showing you the ETF, a fund called Wheat, W-E-A-T. And in a moment, I'm going to show you the spot wheat futures that we use in our office here as the primary tool of studying wheat. But the ETF's a nice alternative for those of you who don't want to get involved in futures trading or can't afford the high leverage and the margin and so forth. At any rate, the best forecast is this market's going to trend higher up into the low 20s, maybe up to like 23 or something later on. And we're at least showing you a time objective probably in July, late July to early August for this L1 top. So I think the key is, you may recall for the past several weeks, we've been looking for breakouts of various levels around the $19 level, and it just seems to poke through it and come down. And I'm a little suspicious when it breaks through $19 this next time, $19.20, something like that. It's finally going to work. Something to consider. Now let's flip over to the futures. So this is a daily chart of spot Chicago wheat futures, still running off the July, I believe. Yes. And what I wanted to show is we have what's called an L3 cycle. That's an intra-month short-term cycle, and it's been stretched about the maximum length. And even though the market was weak today, it didn't seem to really want to go much lower than the low of June 10th. 5-day stochastic didn't really want to go much lower. And so I'm a little suspicious if we can get a turnaround next few days and eventually get it over the 40-day average, which has been a real nuisance for wheat traders, then I think this thing is more bullish. And we're looking for an L3 short-term top next week, so it's time to run it up. Now as we move out to the weekly chart, those L3 trends or cycles become just pops and drops every few weeks, some working better than others. And they build in the next larger trend called an L2, although sometimes the L3 builds directly into an L1. So what we have is this is an L2 cycle, and this goes back to here to an L2 cycle, and that creates a much larger L1, so it's time for an L1 rally into July to August. But along the way we had to have this L2 cycle, and it's time to bottom. You can see this window reversal. This is about what we're looking for prices, probably no lower than 672, if that low. I think it's going to stay above May 20th low at 674. And so if we can just get it to trade over the week, this week's high at 699.75 and a close, I think that's bullish. More importantly, if we can get it above what we believe to be this L2 top, this is the more important breakout level in my opinion, 714.5 spot Chicago wheat futures. If we can get it above that, then it's on its way higher to perhaps 760s to over 8 for an L1 top sometime in July to early August. So granted they're selling, but I think they're just base building is all they're doing. They're building potential here for a move, and granted all ranges can be assumed to be building potential for up or down, but I think the best script, model script, is correct, suggesting it's time to rally wheat. So watch for these reversals and turnarounds and breakouts, and if you go into the market, then go ahead and set some stops underneath some kind of weekly low to give yourself a little bit of risk protection. But I think ultimately we're going to see a run higher. And lastly, let's finish with long-term 3-year cycle on the monthly chart. And even though it's a sloppy, broken up one, there's still possibilities of a bull market this year all the way into year end, leaving the door open for crop problems. But more importantly, look how it's hugging this trend line, connecting two long-term 3-year cycle bottoms. So if we can just get this to turn around and go above last month's high at 735, that's even a greater bullish signal in my opinion. Again, I think this is just base building, hesitating, and I think wheat's a good buy for a summer rally, and it may turn into something far more bullish when wheat can stay up towards late this year, suggesting maybe a crop problem as well as a recovery in demand as economies recovery. Thank you.